Arup Chatterjee, because he's basically the principal financial sector specialist, sustainable development and climate change department with the Asian Development Bank, and is located out of Manila. Sir, you also advise on disaster risk financing and agriculture insurance, social security, and things like this, sir. Now, how do you see the Southeast Asia receiving more natural calamities as compared to the balanced part of Asia, sir? That's my point number one. And second point is that how prepared do you think are insurers and the reinsurers to tackle this situation? Sir, if you could include these 2-3 points in your deliberations, sir, it will be wonderful, sir.
Okay. Thank you, Pratik and BIMTech for inviting me to this colloquium. Thank you, Praveen, for a very wonderful introduction to the session, which sets the tone. And let me start straight by responding to what the question which Pratik raised. Well, I'm in the Philippines for the last 12 years now, and we are what we call on the Pacific Ring of Fire.
Yes.
We extremely high risks of earthquakes, tsunamis, volcanic eruptions, because there is this movement of the tectonic plates, especially in the west coast of Sumatra, Java. Then we have issues related to landslides, flash floods, local outbreaks of epidemics, and they all pose additional disaster risks. So like I stay in Manila, the Philippines faces about 25 cyclones every year, and 3 or 4 are of high intensity which hit Manila. So this is a way of life now, so far this country is concerned. But in spite of being surrounded by sea and with all these tsunamis and cyclones, there are farmers who are prone to drought-related risks, and there is loss of yield due to frequent occurrence of drought. So that's the variation. But we talk a lot about the physical hazards and the physical risks, but I think the other area which we also need to talk about is the risk directly related to the release of the greenhouse gases in the atmosphere through human activity, And one of them is carbon dioxide, which mainly results from the burning of fossil fuels for energy, transportation, because a huge population sits in Asia. And then there is a young population, there is a population growth, and the production and consumption models are unsustainable. There are methane emissions because of large-scale animal farming. There is large demand for meat and dairy. So that is one aspect of one aspect which contributes to the climate risk. Then, if you look at the ecosystem, which Praveen also alluded to, they also store large amounts of carbon, particularly the forests and the coastal marine ecosystems. And their destruction could also result in large-scale release of greenhouse gases into the atmosphere. And we also talked about science. If there is no scientific agriculture, I think even crop production can also contribute to greenhouse gases. So that is where also we need to put our thoughts together. Then the third factor will be in terms of the global coordination in terms of reducing emissions. And there was Praveen mentioned about the COP26. So we need to have a better understanding of the tail-end climate risks, the climate tipping points, which has been raised in the IPCC's recent report, and therefore with the increased urgency of prompting faster action. And finally, the risk is of the catastrophic climate change, which is increased because of insufficient knowledge, understanding of impacts and vulnerability, and that also affects our ability to build resilience. So in terms of initiatives which Asia is now taking in terms of mitigating this threat, and then I will come to how insurers are placed. and this is where Asian Development Bank has been working very, very closely, and maybe it. I can just complement what Praveen has already mentioned. We are working on enhancing the risk identification and analysis. Thereby, we are able to. The objective is to reduce economic losses. Our focus has been on floods and droughts and looking at water management infrastructure upgrades and also enhanced weather forecasting for ensuring better disaster preparedness. The second aspect where we are looking at is in terms of increased investment in disaster risk reduction and helping government officials have a better understanding of risks and also contributing to a risk-sensitive decision-making for public investments, which is not happening. So we need to take a more integrated approach in terms of building disaster risk resilience in the face of rapid urban expansion. So that would what you call link to areas like land zoning, about building property on the waterfront, and also implementing building codes, construction codes, and things like that. The third area is in terms of improving access to disaster risk financing. And here we are working in terms of critical, what you call, looking at how we can better manage the critical public sector infrastructure and assets, because most of these assets are not insured. And whenever there is a earthquake or a climate-related disaster, these are the lifelines which are affected, and the government's focus first is in terms of restoring these lifelines so that livelihoods can be restored in the shortest possible time. And the governments lack liquidity in terms of budget to start these reconstruction activities. So we are looking at developing insurance pools even at the disaster, what you call city level or at the municipal level. So that is one aspect we are looking at. Then I think something what COVID has also demonstrated is the role of the community in disaster risk management. Of course, governments played their role, but I think communities played a much, much significant role, and that has been undermined. So we are looking at enhancing community-based and gender-focused approaches in terms of engaging community-based women organization and strengthening women's climate and disaster resilience, because our work has found that if women are at the front and center of this disaster risk resilience approach, there is more disaster risk reduction that way, and more disaster resilience can be built. And then finally, we are also looking at linking these with social protection programs. So basically why I mentioned all these things is there is a focus on disaster risk reduction because it is the residual risk ultimately which needs to be insured. So if you can bring the risk down, then you can make insurance more affordable and also ensure that with better maintenance of assets, you are able to minimize the effect of the losses. So finally, in terms of what insurers can do in this space, I would say that in terms of preparedness, the Asian insurance industry, well, they're still not prepared, in terms of this rising climate change related losses. There is absence of adequate disclosure. There is no climate specific stress testing. And mind you, it's not only the insurance organizations, but also the banking industry also doesn't have adequate disclosure. So banking and insurance being very, very closely linked. Then they are not seeing, even the insurance industry is not seeing beyond the traditional catastrophic models. So as a result of that, they are unable to assess the effectiveness of insurers' actions, especially the long tail consequences. Then in terms of financial market participation, insurance companies, of course, because they are in the business of managing risk, they are possibly better placed. But then they need to look at changing their business models and looking more as transactional risk transfers and indemnity payments, which they are looking at so far. to areas like mitigating physical climate risks, such as providing rebates for resilient construction materials, working with governments to improve land use planning and providing discounts. So these are the areas where insurance industry can offer innovative solutions. Of course, there are parametric solutions. I'm sure other panelists will discuss about that. But in emerging markets, there is also a need for a lot of risk and insurance literacy. It's not insurance literacy alone. That will improve the capacity to identify and assess the risk using better modeling techniques. And also risk assessments can help in driving more climate change policies. And insurers, I have seen, are already adopting, I would say, green or energy saving policies, where they are, say, charging lower premiums for hybrid low emission cars, or insurance companies covering the green economy ecosystem like solar panels, hydropower, geothermal energy, and all. So insurance, and this is my concluding statement, insurance has to play a role from three aspects. One is the traditional protection angle, what we all know about. The second is in terms of enabling access to finance. So if some organization or entity is insured, they are able to bring down the portfolio risk down, and therefore make access to credit or finance more easier. And the third area is in the term of de-risking, So, and that is where life insurance companies play a role. And Praveen mentioned again about the ESG investments. If life insurance companies can invest in these types of climate resilient infrastructure, and I mean both the social infrastructure and the physical infrastructure, then the insurance industry, which is the property and casualty industry, they can come up with more tailored solutions to see that these resilient infrastructure is better maintained and you get the dividend for your investment. Thank you so much.
Sir, but if I understand you correctly, somehow I got an impression that what you were saying is that all of us are in a state of denial as far as such climate change risks are concerned. I mean, is it true, sir?
Well, we are in some sort of a denial. Definitely we are. Because we are not well informed, and so one is we are not sufficiently informed, we don't have sufficient data, and then we are also not having proper enabling environment and financing structures in place also. So